everyone. Thanks for tuning in to episode 14 of Takeaways. My name is Patrick Searcy. I'm Director of Marketing for ALN Apartment Data, and I'm here with the star of the show, Jordan Brooks, who's our Senior Market Analyst and is also currently in Boston as we're recording this. Jordan, how are you?
I'm good. Yes, coming to you live from my hotel room this week.
All right. Well, you're looking good. So we'll hop right into this then. The article that we're talking about is it's called Larger Properties Pacing the Multifamily Rebound. You've written, and we've also discussed a lot of different ways to look at how the industry has performed and responded to the COVID crisis. And here you've written about properties of different sizes. So this is a really great article. Let's just hop right into all of this. What were those top line results that you saw?
Yeah, so basically what we did this month is we broke conventional properties into four categories according to unit count. So we have 50 to 99 units, 100 to 199, 200 to 299, and then 300 or more. And then we just kind of looked at the typical kind of KPIs for multifamily: absorption, rent growth, lease concessions, things like that. And what we found was that, again, from just as with other perspectives we've kind of evaluated this multifamily rebound from, the kind of the top line takeaway is how broad-based and widespread the recovery actually has been. Demand has been strong for those smallest properties all the way up through the largest. And we also kind of did a cross section of even within these size breakdowns, what does it look like from a price class perspective within each group, and from a market tier perspective within each group, meaning markets of various sizes. And really, the results were positive in small markets and large, across the price classes, and for all four groups in terms of property size. And from a net absorption perspective, apartment demand, the two groups of larger properties, really the 200 and up properties, each absorbed more than 50% of available unoccupied units between the start of the year and the end of August. So that's a really encouraging sign. And then again, the smaller properties, the 50 to 99 were about 40% of available units absorbed, and the 100 to 199 were also up there above 50%. So really just kind of a broad-based, widespread recovery, which is great to see.
Did anything in particular stand out below those more high-level numbers?
Yeah, I mean, one thing to keep in mind in particular is that these largest properties tend to be overrepresented among the Class A and the Class B space. So when we're talking about larger properties performing best, it's important to keep in mind that a greater share of those properties are in those top two price tiers, which have also performed best this year. So we really saw that particularly, in the Class A and Class B space. In those two groups of largest properties, we saw really good results there. And kind of something else to keep in mind too is when we're talking about smaller properties, they tend to have a lower rate of RMS use, which is going to have an impact here. And one thing that we did look at was, the percentage of each of these kind of four property groups, where are they located? And you might think, well, there's more smaller properties in smaller markets, and so that's why the smaller properties didn't quite perform as well. But if you look at multifamily results, and particularly rent growth this year, really the primary, the secondary, and the tertiary markets have performed very similarly in terms of rent growth. And so even though there is a little bit of an overrepresentation in smaller markets of smaller properties, that didn't really impact the results very much.
So what does all this tell you about how the multifamily industry responded to all of the challenges of 2020?
Well, one thing is, the larger markets that were harder hit last year have come back stronger this year. And again, we see that playing out, particularly in the groups of larger properties in this month's newsletter, but we also saw that even in the smaller properties in the larger markets. So that's one takeaway. And then the other, I've already mentioned it a little bit, but the main one is just, again, the encouraging results in terms of a broad-based recovery. We're not just talking about, okay, the large properties are doing great with their RMS systems and professional management and, amenity advantages, things like that. But the smaller properties are still suffering. We really see positive results across the board.
Well, that's really great to hear. And I'm sure we'll find out more about this and other ways of looking at the industry coming up. But what's on your schedule coming up? I know you're in Boston today. What else is going on with you?
Yeah, so I'm in Boston as we record this at the Massachusetts Apartment Association annual expo, where I'll be speaking. And then September 21st or 2nd, don't quote me on that date, one of the two, it'll be on our social media channels. I'll be speaking at the Bay Area Apartment Association in Tampa. So for any viewers of that are in the Central Florida area, keep that in mind. Registration, I believe, is still open, although Russ Webb did say that they're getting close to capacity on that. And then in mid-October, I'll be in Louisville, speaking at the Louisville Apartment Association. And in addition to those, we'll have additional blog content coming out in the coming weeks, and so be on the lookout for that. And that's alndata.com/blog.
Well, he's absolutely right. We will have a lot of that information out there on our social media channels. And you can find us by searching on Twitter at ALN APT Data, or you can just search for ALN Apartment Data on Facebook and on LinkedIn. And right about now is that little button that you see come up for subscribing, and click that notification bell on our YouTube channel. So that way you don't miss any of our new content, whether it's takeaways or anything else that we put out there. Thank you so much, Jordan, for taking time out of your morning before your speaking engagement. And I look forward to talking with you next month.
Thanks, Patrick. I'll see you next month.